But it's Diwali in the air now. You can feel the festivities. And as investors are heading into the new Samvat, there are lots of questions. Has India's dream run finally paused? Or is this just a catch-up phase before the next leg? My colleague Prashant caught up with Samir Arora, who believes the tide is about to turn. From relative underperformance to shifting global flows and the impact of rate and tax cuts, here is why Samir thinks India's setup looks stronger than the sentiment suggests.
The big picture is that there are 3 or 4 positive things right now. Number one is India has done very badly this year relative to peers, emerging market benchmarks. So over 5 years, India has still done better than EM and China and all. Maybe only US has done better. But this year, India has had its worst relative performance in 30 years, which is some 25-27% underperformance in 10 months.
Right.
That beyond a point does not last. Second is, what are the reasons why FIIs are selling? I've been feeling that the world is interested currently, and not feeling that, you can see with data, that the world is putting a little bit of its global money into non-US markets. And it is not that they are doing it as a longer term play. Even currently this year, non-US has beaten US by more than 10%. So S&P is up some 13%. World excluding US is up some 23-24%.
Right.
So you can do it because you are upset with US policies or tariffs.
There's performance as well.
And so it's not that
Correct.
I don't like US. A little bit only. And so if the rest of the world is getting money, so if the US is at 65%, if they reduce 3% for US, only 2%, and give it to the 35% part of the market, for them it is 6-8% growth. In that, we have a valid claim that we should also get money. But instead, India has been losing or people have been redeeming. I think that had to do with the extra tariff and the isolation.
And hopefully that
India.
also perhaps.
That I think is getting over. You can see it from the tweets. You can see it from Mr. Besant saying that they are going to change the energy basket in our favor. That is from India saying they are willing to buy corn and, you know, a little bit. And then this good message that Trump sent to Prime Minister Modi, all those things, it's happening. Third is India has had a lot of interest rate cut, GST cut, tax cut. So all these things plus minus a few months has to impact. And fourthly, you can say that this year, the IT guys were having very low growth. Even next year, they may have low growth, but on a relative basis, they're not declining more.
Correct.
And so broadly, you will get 12, 13, 15% growth, and that kind of return for now is okay, because your comparison is not with previous years, but with debt returns or fixed income returns. And fixed income, say 8-10 years ago, used to be 9%, 9.5% for 10-year government bond. So we would say you'll get 15% return in equities. Now, if that is giving 6.5, you're supposed to make 12 only.
Correct.
And I think you will make 12 kind. And then maybe following year, you know, IT will grow 2% more. So you'll, you know, maybe 15-16%. But in general, the world, I mean, the Indian public that is, will have to realize that 20 to 25 returns were not normal.
Thoda normalized.
Thoda normalized जो है, वो पहले होता था 15ish for the index, and then we are supposed to beat it. And now the normal maybe 12 to 13, 14, maybe for some time, and then we don't know.
With some shooting stars in between,
And then,
obviously.
then we'll get some stocks will do well.
Yeah.